We look at the latest Bitcoin trends, including macro risks and on-chain and flow metrics, to reveal the best time to buy Bitcoin and the risks of buying BTC. However, we think Bitcoin is a good long-term investment for the next 1 to 3 years and is bullish overall. That means we expect the Bitcoin price to rise in the long term. But we are not experts, right? So let's see a deep analysis of this statement and figure out, is this the best time to buy Bitcoin? But before that, welcome back to your own channel, Crypto World, where you'll get all the crypto knowledge. And yes, do remember that this video is not financial advice, so do your own research before investing anywhere. So without any further delay, let's get started. To understand it properly, let's actually see. Why has the BTC price dropped? Macro reasons for the current Bitcoin price. Crypto markets almost look like they had partial immunity from the tech sell-off and growing risk aversion. But recent price action has put paid to that notion. The relative stability of Bitcoin between mid-January and mid-April, when it choppily trended up with higher highs and higher lows, was simply the calm before the storm. Bitcoin is down 70% since its November high of $67,734. Chart 1 is a BTC price chart, with Bitcoin in blue. And there is likely more to come. The crux of the matter is that U.S. interest rates are rising. Years of low interest rates since the global financial crisis in 2008 have seen markets reach extreme valuations. Who cares if tech companies are loss-making if the companies can borrow easily? And if companies cannot borrow money, they can attract capital from investors, who themselves have likely borrowed money. Crypto markets have not been immune to the support from cheap leverage in the fiat markets. After all, crypto offers the tech dream of scalability and regulatory arbitrage. And if there was any doubt that crypto was not benefiting from low interest rates, then the recent declines in crypto as U.S. rates have risen should remove it. Furthermore, the correlation of Bitcoin to Nasdaq started to increase sharply just as U.S. interest rates started to rise. This is a common occurrence throughout history. When the liquidity tap turns off, usually by central banks raising rates, the correlation between diverse assets shoots up. This time appears no different. Now have a look at how low can Bitcoin prices go. One exercise is to see how low prices could get were the Nasdaq to suffer a 2000-style crash. After all, the Bitcoin and Nasdaq correlation remains around 65%. So where the Nasdaq goes, Bitcoin follows. Back in 2000, the Nasdaq suffered a 78% drawdown. Currently, the Nasdaq is in a 30% drawdown. A repeat of the 2000-style drawdown would put the Nasdaq at 3,500. So where would crypto be if Nasdaq were trading at this level? We estimate a regression between Bitcoin or Ethereum returns and Nasdaq returns from 2020 onwards. Based on this relationship, we find: Number 1. Bitcoin prices would reach $8,254 if the Nasdaq fell to 3,500. This implies a 72% decline from current levels. Number 2. Ethereum prices would reach $143 if the Nasdaq fell to 3,500. This implies a 92% decline from current levels. And finally, the thing you guys were waiting for. Is now a good time to buy Bitcoin? Bitcoin gapped below $20,000 again this week, 20% off its mid-August high and just 12% off its mid-June lows. This correlates largely with the recent decline in other risk assets. The tech-heavy Nasdaq is down 7.5% over the past month, with the S&P 500 close behind at 4.5%. The generic risk asset route is largely central bank-driven. 26 August 2022 saw Chair Jerome Powell reaffirm the Fed's hawkish stance at Jackson Hole, a move that came alongside a new bout of ECB hawkishness. Yet perhaps surprisingly for the traditionally volatile asset, BTC held the line around $20,000 and has moved mostly sideways since, prompting some to call a bottom to the beleaguered coin. Our view remains that the Fed will need to hike considerably beyond market expectations, 175 bps by year-end. We also see a strong upside risk for ECB hikes. These two aspects together should sustain the risk-off momentum in the near term. For Bitcoin, meanwhile, if the price drops further below current levels, we could see it reaching $16,000 or even $8,250. Amid recession risks in the US and most of the West, plus an energy crisis in Europe, things are not looking great for Bitcoin. Should you buy BTC now? The quick answer is probably not. The macro backdrop for Bitcoin is bearish. We analyze various on-chain and flow metrics for Bitcoin, which are bullish. So overall, we are slightly bearish. Therefore, if you have a 2 to 4 week horizon, now may not be the best time to buy Bitcoin. Now most of you who are quite new to all this must be thinking, how to make money investing in Bitcoin. It is easy to get carried away with the fear of missing out. You are probably aware of Cameron and Tyler Winklevoss, who are reputed to be the world's first Bitcoin billionaires with over 100,000 coins. Or what about Barry Silbert, the owner of Grayscale Bitcoin Trust, Coinbase, and Coinbase? Success stories like these often give people FOMO or the fear of missing out if they do not invest immediately. However, to invest in cryptocurrency, we must first understand it. Crypto tokens are unlike any traditional asset class, and they are all different. Just because you understand Bitcoin does not mean you know how Ethereum works. Each currency has different underlying protocols and technology. That impacts how they trade, their volatility, and how you can value them. Some are more like stocks, others commodities, and others currencies. And each crypto token has a unique structure of supply. We think crypto markets are a worthwhile long-term investment. The technology can capture market share on some existing markets like payments and stock trading, while creating new markets like valuable, scarce digital assets. Buying the dip. Your exposure to Bitcoin needs to be appropriately sized so that you can survive 50% to 80% drawdowns. Drawdowns provide good entry levels for exposure, but we would not go max long in an environment of rising central bank rates and falling global growth momentum. Concluding all that, crypto, including Bitcoin, will remain under pressure. For Bitcoin, this means the breach below $20,000 could worsen. The main near-term support would be Fed dovishness rather than any crypto-specific dynamics. And for long-term investors, we still think some allocation to crypto makes sense, just like an allocation to equities also makes sense. But be prepared for near-term weakness. So this was all for today's video. Don't forget to give it a like and subscribe to the channel. See you in the next video tomorrow. Until then, peace out.